Good morning and welcome back to the Opportunistic Trader for Tuesday, August 21. It is a little bit of a quiet morning. I want to talk about yesterday. First, we are still in two trades, of which are both not really working for us. The S&P, we have a stop out. We almost got stopped out. We're about $1.50 or so away from the market. It looks like potentially we may get stopped out of that trade, and that will not be a good one for us. We are still short Apple. Apple actually came in about $2.50 yesterday. It's pre-opening up about 80 cents. We're down about $1 or $1.50. I feel a little bit more comfortable in that trade. The stocks run really, really strongly. Across the board, overnight in Asia, Asian equities started out a little bit weak and then rallied across the board, where China finished up about 1.25% to 1.5%. And across the pond in Europe, the markets are mixed. London is down a little bit, and overall, all other markets in Europe are up close to 0.5% to 1%. Bringing us to the U.S. markets, the S&P futures are trading up 5, up again, pretty much up every week for the last 10 weeks. I think we have one flat or slightly down week in there, so it's been rallying all summer. As I said earlier in the month, I think the highs will be put in here, in this area. We may make a marginal new high, but I think once everybody gets back from the summer vacation, the market will trade differently. Looking at crude oil, there's an interesting divergence. Front month crude is only up about 25 cents, and we were trading the crude roll or spread because September is going off the board for the futures contract. And that spread about 3 days ago was about 48 cents, and now it's trading at $1.54, which is a pretty strong move. The September is trading at over $67. We would like to buy weakness if there is weakness in crude. Inventories tonight after the close. This will be, if we're in here, the 8th straight down week in crude. Interestingly enough, the S&P is up almost 10 weeks in a row, so that is a really, really key divergence. Usually those move in lockstep. Looking at gold here, I put on a short at just a trading short at 1200 spot 40. Looking to take a couple of bucks out of it, maybe $3-4. The move has been unbelievable. Our team with Vince was all over this on the lows. The market's rallied about $35 off the low. For me, it looks like an area that looks a little bit toppy for a trade. So we shorted that, and we're looking for a few dollars on that trade. Across the foreign currencies, our dollar is weaker. I think a lot of that has to do yesterday's Trump comments, basically calling out Powell for raising rates and saying that, if he had his way, that rates would not rise, and he's impeding the recovery. This is the first time, in history that a president has sort of gone against a Fed chairman or even commented on a Fed chairman. They're supposed to be completely separate and operate separately, but with Trump, it doesn't work that way. Market in Asia started weak off of that, and then firmed up, and obviously the comments don't really have much market impact, and that's what I see across the board. And as always, Vince is joining me. Good morning, Vince. And
hey, good morning, Larry.
I'm looking to hear your insights about the overnight and thoughts on trades for today.
Well, you cover pretty much everything. Just some broad observations. If you're trading metals or commodities, you have to be paying attention to currency. So well, I'm not going to say that I'm a currency expert. I have to pay attention to pairings. China, because of the trade wars, and this is something for active traders to keep in the back of their mind as drivers of whatever it is they're trading. Because of the trade wars and the tariff problems, China has had a lack of liquidity in the yuan, and that has actually debased it. It actually has weakened it. So it's kind of the opposite of if you print too many dollars, for example, you'll get inflation. But if there aren't enough in circulation to use, you'll also get just a lack of use. So that'll be like a drastic deflation or a Great Depression situation. What we're looking at now is, the reason I bring that up is because the yuan has, and I'm pretty sure I'm right on this, but the yuan has been weakened recently, and that's because of the trade worries. But for the last 4 or 5 sessions, China has been injecting currency into the system, injecting liquidity, and put the word in quotes, but they have stabilized the Chinese yuan. So if you've stabilized your currency, that is, the major pairing. Well, today it's a little bit weaker, but if you've generally stabilized, if people believe that you've stabilized your currency against the dollar, then you have a permission to be a little bit more risk on. So people roll out of dollars. The other trade partners benefit. The euro gets stronger. The yen gets stronger, and gold, gets off its behind. So actually, risk on means off of a deflationary thing is positive for something like gold. A couple things happened that I think are significant. So, for example, today, the market is slightly returning a focus to the U.S. dollar Japanese yen pairing on gold, and the problems are still there. It's just that everybody seems to be again opiated or high on whatever money that's being injected again. Gold specifically, the situation in gold is about to possibly get interesting very quickly. The gold market, just if you're for active traders, gold market between 1205 is our target. We got long yesterday on a signal and put some other people into it as well. 1205 is our target, and unfortunately we might have got a little too cute with our target, because between 1205 and 1207 in basis December there will be some serious congestion. Anything below 1205 that you sell, you might get a pullback all the way to 1193. Below 1193, 1189, above 1205, 1207 area, and this is why I say it gets interesting. If the low that we have put in at 1167 holds, okay, so this is a technical comment, although I'm not a technician. If between 1167 and 1180, that is a serious trading area section historically. Above that, if that area holds 1167 in Dece, this market is just getting interesting. And I don't mean it's going up to infinity. I mean, it might become a good swing trading market. If this market holds and this month closes above 1220, although it seems like it's unlikely, this market is back in play as a product to trade. And then you start saying things like, well, we could be at 1600 in 6 months. But that's not neither here nor there. The point is, start trading gold because people have positions on they have to unwind. For example, yesterday silver was down while gold was up. That was a silver gold position being unwound. Gold is a little bit softer after rallying during Asian time. Starting at 230 in the U.S., there's an algo that's coming in now buying. I don't know why. I don't know for who, but that's what's going on. But back to the broader. So if you're short, Larry, under 1205, I think you're safe. I mean, that's my target. We have a stop in our order and our trade at 1189. We're moving it up to 1193 today. So to give you an idea of, you're trading the range and we're trading the breakout. So you can make money both ways there. In other markets, I think you're going to see volume shrink to a comment you made before as we go towards the weekend. So you might have bigger moves on lighter volume. And as a result of that, you should be lessening your volume or widening your stops if you're actively trading the markets. Hope that helps.
For sure. It's interesting, we're sort of both in the same commodity, and you're making money right now, and for the moment, so am I. My trade, I'm looking to really only make $4 or $5. Obviously, when we get down at that level, I'll reassess. But that's sort of the trade that I'm looking for. And funny enough, you've been pretty much long it from the lows, and you're just raising your stop up as we go, so you're protecting your profits at this point. So it's interesting to look at two different trades in the same market, and both at this point are making money. So that's just an interesting thought.
You could be bullish and be selling. So maybe as a team we're bullish, but you see short-term exhaustion and you want to lean into it. And where I want to take profits is where you want to get short, essentially, when you think about it.
Yeah, I'm just looking at it as a short-term trade. I was very focused on it the night that it made the low on the volume, and I thought it was a washout. But at these levels against 1200, I don't mind really being short. I don't see it going anywhere. The only caveat again is what we discussed before is the dollar, and the dollar basically being weak here is leading to a little bit of strength in the gold market. I'm a little bit focused on oil. I'm waiting to buy dips in here, but the longer it sits in here, the more bullish I get on it just for a trade. And the spread widening to me is interesting. Came in.
Does that mean people are rolling early, or is that a fundamental?
Well, no, the contract's going off the board either today or tomorrow, and it's
you're
very,
talking about
very liquid. SEPAC. I'm looking at the front month spread, and for option expiration, most people roll the day after or the day of, so most people are out of it, and that spread was about 50 cents over, and now it's widened significantly. So I'm not sure what they're looking for on the supply number for this week, but I'm expecting maybe a surprise draw, but we'll see.
I remember when I still trade oil, but I remember when options would go off, because I was primarily an option trader trading gamma in futures. I remember the front month future, as it was going off, would frequently give an opportunity to, let's say, if it rallied and it dragged the other market a little higher and the spread underperformed, but then it went off the board. The next day I remember it being a big down day after the future went off the board. And the reverse can be true as well. But right now, although you're not asking, I'm just volunteering. Oil on the 60-minute. Remember, you trade from feel and technical stuff, and I trade from volatility-based type of things with technical stops. On the hourly in oil, it says we're taking a breather, meaning we could go up to 66.40 and volatility could come in. And on the 4 hour, it says it's between 65.20 and 66.30 is our range for the day. But there's a lot of money you can make in that move. That's pretty interesting. I have no signals, so I have no alerts, which probably means it's better to be trading your way in that market than my way right now. Anyway.
I mean, I'm not really making a trade in oil. I'm just observing it and just looking at the spread and whatnot. And Tracy, who's our experts room in commodities, is very, very versed in oil. So I'm going to talk to her through the chat later and see if she has any thoughts across the equity markets. Interesting day yesterday across the FANG board. You had a couple of FANGs up and a couple of FANGs down. Netflix had an interesting move yesterday, traded down to the low 300s. It's rallied about $30 off the low. It was down about 5, ended up about 12, which is a nice move. Those stocks are great day trading stocks. A lot of action in our equity room, a lot of chatter, a lot of good trades yesterday coming out
Somebody
of there.
took $8 out of Google, and that was like, when you think about it, like, that's a bad day. You know what I mean? The range of these stocks. Someone took $8. One of the guys took $8 out of Google. I forget who it was.
Yeah,
But
the semis turned around overnight. They were heavy in the morning. Facebook is 3 off its low. Apple is up $1 today. Apple is weak. It's funny. When Apple is weak, they buy the other ones. So it's a sector rotation inside of FANG now. We're on top of it. We've been trading it actively. There have been good suggestions on other names, that people are trading in the chat on the equity front. But overall, my take yesterday, was banks a bit stronger, FANG mixed. Apple, obviously in the FANG with a double A, was down, and this morning S&Ps are up about $4, near the highs, within probably 0.75% or less of the all-time highs, which looking back to February, March, looked almost improbable. But they pulled the rabbit out of the hat. The S&P is up about 6 for the year, and I think the late third and fourth quarter are going to be interesting for equity markets. Obviously the election coming up is really big. I think people are not pricing in anything on that, which is a mistake. I think that'll move markets pretty good, and that's sort of my take. Looking at straddle pricing, today is not an expiration. The straddle pricing is pretty low. It's actually only about $11 or $12 for 2 days, so they're not expecting much. So we'll keep an eye on that. And overall, that's what I see. The dollar's been an interesting trade. Do you have any thoughts on the dollar?
Yeah, well, I think whether it's we're looking at risk. We're looking at, to use the broad term, a little bit of risk on. And by increasing liquidity in the yuan, China has taken pressure off of them. They're kind of counteracting. They're saying, okay, if there's going to be tariffs, then we're going to just print more yuan. And basically, that currency, they can't weaken the currency that much. And I'm bringing this back to the dollar because that's what your question is. I think, and this actually has to do with your comment about the Fed as well, I think this market will continue, the stock market will continue to do what it's doing, which is be irrational, and the world will continue to have problems because we are conducting an economic warfare of sorts, because we need to do it before the dollar loses its, I guess, global hegemony. And the way to do that is to export deflation. And so if they need us to buy stuff and we're not going to buy it, speak broadly, that will ironically make our stock market go up because many reasons. But the reason that I think as a trader is most apparent is that people will put their money into dollars and as a flight to safety. The dollar, I think, is pretty linear in what we're looking at. People will put their money into dollars, not gold, when there's a problem in China, when there's a problem anywhere. But I think the problem is, and the wild card is Trump. And that's an obvious thing to say. But if you look in the past, presidents, like you said, presidents rarely spoke about the Fed. They let the Fed at least seem to run independently. If whatever they did in influence from the Fed, they did through corporates or behind the scenes. But if you notice, since Trump came on and even before Yellen resigned, the Fed got very quiet. The Fed used to be very chatty and talking markets and what they were doing. Now the Fed is very quiet, and I think that's because they know saying anything is risking having Trump coming back and saying something counter. And we're witnessing possibly the beginning of that sort of thing happen. What did Trump say? I hired Powell and I regret it now, or something like that. So with regards to the dollar, it might become a little bit of a basketball or a ping pong ball, I should say. The Fed wants to remain at least ostensibly independent, and now Trump is going to complain. Will the Fed react by jawboning and create more volatility, I don't know. Will the Fed just climb up and do their job? I don't know. But the dollar will do what it does based on policies on the trade side right now, not necessarily monetary. So my question to you is, to throw it back, this must be a bigger variable for bonds. I mean, at least we know what the dollar should do when X does Y. I don't know what bonds should do when anything does anything anymore right now.
Well,
is it a safety product? Because it doesn't seem it compared to stocks.
It's interesting that you bring up bonds. There were comments out of Jeffrey Gundlach yesterday, which kind of shocked me. The guy just seems to be so off on his timing. He was saying rates were going to go higher, explosively higher and higher, and it never really happened once we were above 3. And now he came out yesterday after the close or into the close and said that yields are going to go down significantly and there's going to be a huge short.
Jeff?
I'm talking about Gundlach, yes.
Yeah, okay, yeah. Because you chopped up for a second, sorry.
And, he's saying that rates are going to go lower because positions are very, very short. And ironically, markets had its first down day here, down half a handle. And again, I think his calls are a little bit off. I think he's playing the game, Larry. I'm not. I think he's looking for an exit. I mean, he's got a position, right? He has an opportunity to get out there and say, I think everyone's too short and the market's going to rally. And initially the market rallies, and who's selling into it? He is, right? I mean, that's why his calls are contrarian, because he's exiting when he opens his mouth, probably. I guess. Yeah. I mean, I'm not going to make that assessment because that would not really be
right.
But
that's one thing you should. I'm sorry. Speaking to the crowd out there, you should always consider that when a public figure makes a comment and they have a position in something, as he does, and they're not bound by inside information, he can have an opinion. So that's just my observation. Certainly, I'm not saying that he's manipulating the market at all. Sorry.
No, I just think that he's talking his book and hoping that he gets the move. But it's funny that every time he does this, it goes the other way. He made some comments in Facebook into 2 earnings ago, and the stock rallied $50 in his face. So again, the bond market remains a bit bid, but nothing crazy. And I mean, I don't know. They're saying record short positions, and I always get leery on that because people are utilizing options as a hedge, and you don't know really how they're expressing their view. So right. I wouldn't utilize that data as gospel. But it'll be interesting to see the movement there, and what happens from these levels. At the low 280s, and we pointed out yesterday, both on the chat and in Twitter, that the yield curve just keeps flattening immensely, and we're looking at some point potentially for some inversions, and what that'll do to the equity market shall be interesting.
All right, flattening is recession, inversion is fighting inflation, traditionally, but who the heck knows anymore?
Yeah. So, that's what we're looking at from our perch here. Again, our trades are short S&P, short Apple, and now short a little bit of gold. And gold is actually coming in as we speak. We're up about $3.50 to $4 on this trade. Maybe we'll try to take a couple of bucks more out of it. We'll put a stop in at the level we sold it at, just so that we don't lose money on this trade. And hopefully this trade works for us, and the S&P comes in a bit, and Apple looks very frothy. So that's what we have going on at the Opportunistic Trader as far as trades. Vince is long gold. I'm short gold. I'm short from above 1,200, and he's long from the low 90s.
Right, currently, no, not that. Well, I mean, you're being kind. I've been trading short-term signals, so I've taken probably $6 out of the market between 11.75 and 11.98, which is roughly where we are now, 97. But my current position is long at 11.96.10. So you're actually more in the money than me right now. We should square up right now before I lose any more money.
Well, I'm in it for a couple more bucks, at least two unchanged. The move's
Yeah.
been, very large. The bands look stretched on a chart.
Yep.
It looks
The hourly's
toppy.
overbought.
And, for me, I'm a mean reversion guy for the most part. So this looked like a decent level to enter. Hopefully the market comes in a bit more and, we can cover it. And that's what we have going on for this morning. And I'll be back to you before the opening to talk more about the trades and see where everything is and update everybody in the chat. So, Vince, thank you very much for joining us again this morning, and we will speak later.
Thank you. Have a good day, Larry. Have a good day, everyone.